Well, my name is Nuno Santos. I'm a tax partner at CMS Portugal. I've been working within the tax industry for 18 years already. So a Golden Visa Fund is, first of all, a private equity fund, so it needs to comply with this specific condition of being qualified as a private equity fund. The private equity fund, for Golden Visa purposes, is required to invest at least 60% of its capital in Portuguese resident companies, which means, obviously, that 40% of its size can be invested outside of Portugal. And the other condition that the fund needs to comply with is that it needs to have, each time that an investor invests into the fund needs to still have a maturity, an outstanding maturity of at least 5 years. So there is not a definition of a Golden Visa fund. There are Portuguese private equity funds that, because they invest at least 60% of their capital in Portuguese companies and they have a maturity that allows Golden Visa investors to come in, that is, so they will always be eligible for the Golden Visa. When clients come to make the investment and choose the fund where they want to invest, I think obviously it has to do with the profile of the client. As I was saying, typically clients that are more sophisticated within the financial investment, they are looking for higher returns. So those are the ones that typically go for the venture capital, pure venture capital options or growth potential or opportunistic funds. If I would look at the range of clients that I've been assisting over the past years, I would say that most of them, their main driver is getting a passport. So bearing that in mind, their idea when they choose the fund is to preserve their capital. So that is for sure. When I look again at the statistics, I would say that 95% of my clients, what they want is to get the Golden Visa, and consequently what they want is to make the investment that they are required to make by law, so the 500,000 euros nowadays, and to make sure that after 6 or 7 years, when they effectively have their passport, the Portuguese passport in their hands, they can get back the investment, the money that they have invested into the fund. So the Golden Visa program started back in 2012. So it raised approximately 6.5 billion euros in investment in Portugal. The tendency to split the investment between different funds is a new trend in the Golden Visa sector. When an investor invests in a Golden Visa private equity fund, he is required to invest €500,000, but there are no additional costs involved. He doesn't have any transaction costs that he needs to bear in mind. He doesn't have any holding costs while he owns the participation units of the fund. And most importantly, any income that he gets from the fund is tax exempt in Portugal. So when clients ask me what do they look for in a fund, I always tell them that they have 3 aspects that they typically need to bear in mind. One is their own risk profile. So what kind of risk are they willing to take? And based on the answer, we can basically direct them into funds which have a less risky profile or a higher risk profile and potentially also a higher return. The second thing that they also need to bear in mind is the credibility of the fund manager that is managing the fund. Credibility, track record, experience. They want to know what is the size or what is the amount of investment under management by each fund manager. That's also an important question that they ask. The third one is if they have any kind of restrictions or preferences in respect of the underlying business in which the fund is investing, because most of the funds are investing in real estate. That's still the main tendency in Portugal, but there are funds which invest in niche, blue economy, sustainability, and some clients prefer to invest in funds that may potentially have a relevant impact in society. So these 3 factors are the ones that we typically try to make sure that clients understand, so that they make a wise and well thought choice in the fund that they decide to invest.